Guess the prince.
Hi, kitty.
Uh,
So tiny.
Maybe.
It's
Yeah,
small.
she's 10 years old. She's not a puppy.
Wow.
So-
Oh,
She's
Oh,
wow.
smaller
wow.
than a cat. Welcome to the VC React podcast. Every week, we bring you insights and reactions from top VCs reacting to weekly news on startups, VC funds, and investment rounds.
This week's episode is brought to you again by the wonderful people at Super Return Middle East, which is taking place from the 14th to the 16th of October, 2024 at the Ritz-Carlton in Dubai. So Super Return Middle East brings you face-to-face with the regional and international investment community. So you'll have the opportunity to connect with over 500 senior private capital executives from more than 20 countries, discover where the region's most influential investors are looking to do deals. So these executives include founders, CEOs, managing directors within the investment community. So this is your chance to grow your network and expand your opportunities. You'll be able to connect with over 175 LPs, 200 GPs, and obviously you'll get the latest insights from leaders in the space on top investment strategies, trends shaping the industry today, etc. So confirmed speakers include KfW Capital, Middle East Venture Partners, Venture Souk, and Hasan, who you will see in today's episode from Plus VC, will also be speaking. So for fans of Hasan, all the more reason to book your tickets. You'll get to meet him in person. I'm also thrilled to share that the kind folks at Super Return Middle East, they've given us a VIP code, so that'll give you 10% off your ticket price. So just quote, I'm going to call it out. Ahmad will put it in the description because it is a mouthful and it's probably not clear what I'm
It will
about
be
to
on the
say.
screen.
FKR 3559 FWDS, and you get to save 10%. So thank you very much again to Super Return Middle East.
In today's episode, we will discuss the $22 million Series B extension by Paymob and the $34 million pre-Series A round from FlapKap, and why Revolut and Nubank are expanding from Europe and LATAM into MENA, and how that could maybe shake things up in the region's fintech scene. We will also explore how Seez, a MENA startup, is trying to break into the US market. We have a great episode for you today with Hasan Haider, founder and managing partner at Plus VC, and Jessica Hussaini, VC senior associate at Globivest. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. And as always, from FWDstart, we have my co-host, Jamie. What's up, Jamie?
What's up, Ahmad? How are things? Lovely haircut. Be remiss of me not to mention
Thank you.
it on the podcast. I know I mentioned it before, but I said
So
I'd
much
embarrass
easier.
you once we start recording as well. Yeah, fintech light this week. Hardly anything going on in that space. So no, but look, let's start with Paymob. As you mentioned, 22 million Series B extension. So that brings their Series B total up to 72 million. So in terms of background, some context, founded back in 2015. It's now raised over 90 million in total. This particular round was led by EBRD, Venture Capital, and Endeavor Catalyst. Participating as well, PayPal Ventures, so all existing investors too. In terms of the backstory, as mentioned, founded back in 2015. In terms of why it was founded, essentially the founders were struggling to integrate payment gateways with their e-commerce platform. So lo and behold, they decided to create their own digital payment infrastructure. Since then, it's grown into a pretty comprehensive payment solution. So obviously began in Egypt. They've now expanded across 5 different MENA countries, so 50 different payment methods. You have wallets, cards, buy now, pay later, QR payments, etc. Used by over 350,000 merchants as well. Since that initial Series B, they claim that they've seen a 6x revenue growth, and they were profitable for the first time in Egypt as well in Q2 2023. And in terms of what they're going to use the new funding for, it's just GCC expansion, expanding the product suite.
Thank you, Jamie. This is an extension to Series B, and it comes more than 2 years after the initial Series B, as Jamie mentioned. It also comes with a tremendous growth, 6-fold growth in revenue. Typically, companies would raise a new round at a higher valuation, given this growth, right? Why do you think Paymob chose to extend their Series B rather than raise a new round at a higher valuation? Is it related to the valuations roller coaster that's happening in the past 2 years?
Yeah, I think definitely. Like if it was 2 years ago, that was like 22. They probably negotiated the terms at the highs in terms of valuations and stuff, especially seeing that the investors in the previous round were mostly international investors. So it was probably even higher than any of the median ones. You know, it's not always a bad thing actually to raise at the same terms or at lower terms. Sometimes it shows maturity from the founders that actually they're like, you know what? We realized that it was too high last time. We know we need this funding in order to continue to grow our business. We don't have egos or anything like that. So let's just raise what we need to raise to continue building our business and go ahead as we need to do it. So a lot of founders that raise at the highs are finding it difficult to swallow that pill. And so if any founders that do realize that, oh yeah, that didn't make sense, you know, this sort of makes more sense, it's okay, let's take a down round or let's do a flat round, I think is quite good.
Is it only the founders, or would the VCs also resist that? Maybe some VCs.
I mean, it depends on the VCs, but usually VCs would have some sort of protection, anti-dilution or any of these things. If they came in equity, they came through safe notes, I mean, they should be fine because they'll get whatever the new terms are if it's a down round. Yeah, as a VC, you shouldn't really be stopping in the way because it becomes pretty binary. It's like, hey, either they raise this money at the last round valuation and they survive, or they don't raise any money and they die. So your investment either goes to zero or kind of stays at the same level as it. So for me, it's like, of course, I don't want it to go to zero. So let's help them raise the money at whatever they need to raise at.
Jessica, what do you think?
Yeah, it can be also an opportunity to just grab a bit more ownership for those VCs, right? Entering a bit at a lower price. Egypt has been seeing a bit of turmoil in the startup system, like in the past 2 years, and it's finally stabilizing and it's, you know, consolidating now its position as a fintech hub. So it makes sense. It makes sense to just reevaluate the valuation, rebalance everything, and attract new capital with more attractive valuations.
Yeah, I mean, Paymob's a great company, right? So it's not,
Yeah.
oh, this is a crappy company. They're raising it. No, it's a good, really solid company that's built a really solid platform, well regarded. It's actually spun out a lot of other founders, which we've invested in, which is quite cool. So Paymob's a great place. So it's not like, oh, this is like a disaster. I think this was a very mature thing for them to do. And considering that Egypt is an interesting market. We've been constantly investing in Egypt even when there was the devaluations and everyone's worried about the macroeconomics and all that sort of stuff. As an outsider, it's like, hey, these are small blips. Things always improve. It's never really the end of the world. But you know, they have the things that go against them, which even if they grew 6x in EGP terms, they probably only grew 3x in USD terms because of the devaluation in currency and stuff. So at early stages, the valuation didn't really have too much of an impact on startups valuation and stuff, but at the late stage, it did have some sort of impact when people were looking at the bigger numbers. So that also probably contributed to the valuation being stable.
Hasan, you mentioned Paymob is a solid company, and it's in the payment sector, which is getting crowded. And they're trying to expand to Saudi and the UAE. There's Hyperbay, Tab, STC Pay, and many other smaller players. And it seems to me that getting the PSP license, the payment service provider license, getting easier every year. I know it's not easy, but easier. What do you think differentiates Paymob? You said it's a good, solid company. What differentiates it from its competitors? Is it the 50 payment options they claim to have, the integrations, the team, or something else? How can they stand out in Saudi?
I think they have built a pretty solid team, and I don't know if they need to stand out in Saudi. They've built a pretty competitive mode for themselves in the Egyptian market, which is a big market in itself. I think the expansion into Saudi and other markets is probably just a hedge against, you know, currency risks and economic risks more than anything else. But if they continue to stay in Egypt and continue to grow at the level that they've been growing and dominate that sector, I think they're still going to be a pretty solid business. So I don't know whether there was this trend where a lot of Egyptian startups were moving to Saudi and other markets just for the devaluation hedge. But again, those things are always pretty short term, and then they'll realize, actually, you know what, we have a solid competitive edge in our core market. Let's just continue to build on that, and build on our strong brand in our core market. And depending on customer acquisition costs, of course, like it depends, but I see retrenchment, and then maybe eventually, in markets like this, a lot more M&A activity taking place. Once some of these players get to the plateau, they're like, we just can't grow anymore by ourselves, so let's try and acquire other players. So I think it's a solid company because they do have a pretty solid competitive mode in their local market.
Jessica, what do you think about going regional?
Egypt has a workforce and has talents and has such a local market that is very rich and very strong that, like, like Hasan was saying, is there really a need to go to other markets where the competition can be very fierce? But at the same time, it's very difficult today to ignore other countries, especially Saudi, which is, trying to attract all those talents, promising them, an IPO on the exchange, trying to revive their exchange, etc. So it does make sense. You cannot ignore this force, and you cannot ignore going to these countries. I think that there will be some local adaptation. Having a business in Egypt is very different from having a business in Saudi, even culturally, and there's a lot of things that will be adapted, but who can do it better than people from the region? So it does make sense, and we cannot ignore Saudi.
Definitely. Let's keep moving fast. Jamie, what's up next?
Yeah, so this is one I know you're keen to discuss, Ahmed. We didn't
Yes.
even have a podcast last week, and we missed each other so much. We hopped on a call and we still touched on this. So,
Yeah.
this is FlapKap, UAE-based fintech. They've secured 34 million pre-Series A. So it's a combination of debt and equity financing. So led by Beko, Pact VC, significant investment there as well, and follow-on contributions, A15 including QED investors, and debt financing was provided by Channel Capital. So this brings total raise up to 37.6 million. They did 3.6 million seed back in 2022. This fintech also founded in Egypt. They offer revenue-based and embedded finance solutions. So primarily aimed at SMEs, so in e-commerce, and then consumer-facing like retail, restaurants, etc. So quick financing options. So whether it's growing inventory, digital advertising efforts, and then obviously flexible payment plans tailored to their cash flow. So in terms of their approach, it's data-driven. So underwriting. So they leverage a couple of different platforms: e-commerce sites, advertising channels, online reviews, payment gateways, POS systems, bank accounts, etc., etc. So in terms of the funding and what they're going to deploy that for, it's GCC expansion again. So pretty vague as far as that's concerned. But I'm sure they'll be expanding the product suite too, no doubt.
Of course. So before we dig into the company, can you explain to us what is revenue-based financing? There is venture debt, we hear about convertible debt, we hear about revenue-based financing, and then POS merchant financing, and a lot of other options, in addition to equity financing or equity investment. What is all that?
So revenue-based financing is basically financing of revenues. I think the name kind of is what it is. There's a couple of different structures, but one way is, hey, I'm a SaaS platform. I'm making X amount in ARR, but I'm only getting Y amount on a monthly basis. It would be great if I could get my entire annual income, subscription income today, so I can use it to expand and grow. I'm willing to offer someone a discount if they'll buy this revenue stream from me, and then basically I'll pay them back based on the revenue that's coming in. So you're borrowing against future revenues. That's what it is. One way is using is like SaaS companies, where they're very predictable revenue streams. You've got X amount of clients, X amount of churn, X amount of LTV, and so someone can come in and be like, yeah, actually this looks pretty good. I'll give you X amount in debt. Whatever revenue is coming from this cohort of people, you use that to pay me back over the next year or two. And so that's SaaS based, but what FlapKap is doing is something a little different, which is more for e-commerce stores. So again, I think one of the issues that a lot of e-commerce players and especially smaller sort of stores, is inventory sort of financing, right? So these guys, they're buying X amount of inventory, you know, $100 of inventory, and they need to start selling it online. And then once they sell and collect that money, then they can purchase more inventory. So their growth is kind of limited by how much stuff they have to sell. And so revenue-based financing for e-commerce players basically comes into that sort of play where it's like, hey, I'm selling $100,000 a month. Can you lend me like $1 million? I'll pay you back, you know, half of my revenues over the next X amount of time until you get your
Hasan,
interest.
correct me if I'm wrong. I think revenue-based financing is more towards tech startups or companies or e-commerce companies with high margins. But in FlapKap's case, it seems that they're targeting SMEs, and those SMEs can come with lower margins. How does it work with them?
No, it's kind of, it's that edge of between revenue-based financing versus invoice finance. Like it's stuff like that. It's basically, I'm fine. Like usual debt in banks is, hey, I have X amount of assets, give me some money against those assets, right? But a lot of SMEs and startups don't really have assets, but they have revenues that they're generating. So the revenue becomes the asset, and you fund someone based on their revenues. And so obviously, depending on margins and depending on growth rates, the amount of interest that you'll have to pay back, the term of the loan, the amount of the loan will all have to be figured out. And it's the job of the revenue-based financing firm to basically understand the mechanics of what they're sort of lending to make sure that they don't have huge amounts of non-performing loans and stuff.
There's one thing that looks interesting in their model is that, so, you know, basically you, like Hasan was saying, you will repay them by taking they will take a percentage of your revenues. Something that is interesting is that even if you're having a slow month, they will adapt that percentage to your month. So one thing that I was asking myself when looking at this type of model is, how do you deal with bad debt? And I guess having a more flexible percentage to adapt to, you know, probably some businesses have some seasonality or something like that. The percentage will fluctuate in function of your revenues. So it's an interesting model. It gives some room to those businesses to grow, knowing that they need capital to make revenue, and now they can use part of this revenue to feed that capital. Interesting.
So yeah, they can fill those cash flow gaps. How is this different from venture debt?
Oh yeah, no, completely different, right? So revenue-based financing is you're financing the revenues of real companies, and venture debt is you're giving money to companies that aren't really real. Like
Oh my God, okay.
no, I'm just messing around. So venture debt is more like you go in and you're like, hey, this startup's raised X amount of equity. I can go in, I can give them debt. They can use that debt to do different things. I'll get paid a really nice interest, somewhere between 15 to 25% interest rate. And I'll also get warrants in the startup that will convert at X price whenever I feel like it. So it's actually pretty cool. But the problem is venture debt is one of those things which are like late cycle sort of thing. So it always comes at the end of the cycle. It's like, oh, everyone starts talking about venture debt when all the hype is happening, because everyone's raising around every 6 months, every 12 months. It's always 2x, 3x higher. And so there's always money available. And so the venture debt guys get paid when the next round happens, because the startup doesn't have any real revenue to be able to pay that venture debt off. And so when the next round doesn't happen, the guys that are providing venture debt are kind of stuck, and they're like, oh, how are we going to get paid our principal back? And so that's when things go wrong. And so venture debt is a very dangerous tool for startups. I would not recommend startups use venture debt for, you know, funding their own operations. The only real usage for venture debt that I would see is that if you're a fintech startup, there's two ways of financing your lending. If you're a lending fintech startup, right? There's two ways of financing your lending. One is off your balance sheet. Actually, three ways, but you know, one is off your balance sheet. One is off someone else's balance sheet. So a bank or someone says, here's X amount of money, lend it on our behalf. And the third way is venture debt. So basically, rather than lending whatever money you have, which is a plateau, right? I can only lend whatever money I have, or I can only lend X amount from this other partner, venture debt comes in and is like, actually, you can lend a lot more. So your growth in revenues grows much faster because you have a bigger pool to lend from.
And it
So
seems
venture
this
debt-
is what's happening with FlapKap. They raised half
Yeah.
equity, half, or maybe part equity, part debt facility, right, Jimmy?
Yeah, so the debt is definitely there to finance their lending to their client
Yeah.
base. And so that's what venture debt I would use it for. I wouldn't use it for any other thing because it's dangerous to pay salaries, to pay marketing expenses. Don't use venture debt for any of that stuff.
Okay, moving on to the next story.
Yeah, I'm excited for this one. So Revolut.
That's a big one.
Finally, yeah, I've been a Revolut customer since I think 2017. So for context, I think half the population of Ireland is a Revolut customer. So you're talking it's like 2.7 million people. I'm excited. I'm very, very excited because Revolut's amazing. I'm a big fan. So yeah, they're gearing up for expansion to the Middle East. Valued at 45 billion as well, only kind of in August through a secondary share sale. So Mubadala took part in that as well, invested for the first time. I think the founder, Nick Stransky, he sold like 200 to 300 million worth of his shares as well in that. But yeah, so they've applied for the UAE's central bank for an EMI license, so that will enable remittances. Obviously, the ultimate end goal is to secure a full banking license at some point, similar to the one received in Ireland, I think last year. So all of our IBANs got changed from Lithuania, which they were previously located in, to Ireland. And they just received one in the UK, I believe, pretty recently. I think it was over the summer. But yeah, look, I mean, they've been growing super rapidly. Did a pre-tax profit of 38 million pounds even last year, 45 million customers worldwide, founded back in 2015. In terms of its relationship with the UAE, it's actually had an office here since 2022. So there's a team of 140 in DIFC at the moment. I think the majority of those were actually relocations from an office that was based in Ukraine. Then they relocated the employees to Dubai. So that's the reason for that. But in terms of this regional push, they've been advertising a number of different jobs over the course of kind of the last 2 months or so. So head of legal, head of finance, job postings related to crypto, etc. And look, they're not the only ones. It seems like Nubank as well, as you mentioned, are also looking at potentially entering the MENA landscape in the near future. We don't have as much detail on that. It's a bit speculative at the moment. It's kind of, I heard through a friend, but the friend seems well placed.
Okay, you know what, Jamie, I will start with you. Why do you think Revolut is such a great company? As a user, let's say.
As a user, it's seamless. I think that's the biggest difference. I mean, when you compare it to the existing, fintech products in this region, I mean, there's no real comparison. I mean, like the existing banking apps are terrible. They just are really difficult, clunky. It's difficult to do most things on them. And Revolut it's a financial super app. I mean, you can do everything. You can. Obviously, it's helpful from, I'm excited personally as an expat, especially from the remittance perspective. It is something that's going to be incredibly useful. I mean, that is extremely difficult in this region to do that. And I thought it was interesting, like during the summer, you had the CEO of Foundr Exchange commented about sort of like, the rise in fintechs in the region. And he said something to the effect of, I'm not worried about them. They haven't really done anything to date. Well, I think his tune might be changing relatively quickly with the entry of Revolut on the scene. But yeah, I mean, whether it's stock trading, crypto, buying commodities, just purely like P2P payment, like it's a wonderful app. It's lovely to use. It's just, I'm a fan. I'm a fan. What can I say?
Get them to sponsor the next episode. I think
you
should just
you're a great ambassador.
Did they pay you?
Look how much I love you guys. Please pay me now.
I do have a referral. I do have a referral code, which we will put in the description. If you sign up, I get €50 per person that signs up, guys.
Oh my God, okay.
If you, that'd be great. I hadn't thought of that. Thanks, Hasan.
Good for you, Jamie. Good for you, Jamie.
This is great.
Okay, so most of the fintechs that we see who grow to become unicorns, they start with something small. It could be point of sale or online payment or digital wallets, personal finance, buy now, pay later, etc. And then they start expanding their services, aiming to become a bank. And add to that, there are, I think, 10 neobanks already in the MENA region, mainly in Saudi and the UAE. But all those companies focus on one country or one region. We talked about Paymob and how they maybe should focus on Egypt because it's a big market. And all these companies focus on one region, one market because of the regulations, because of the licenses that they have to take. Now, those licenses are open to all international players. And it's, again, easier to get these licenses in MENA. Revolut wants to become a truly global bank. And so they're applying to UAE and Saudi licenses. New bank is also eyeing MENA. How do you see this move impacting the competition in MENA? I thought those companies, when they come to our region, they might acquire the local players because they want to acquire the licenses faster. But no, it seems that they're competing head-to-head, they're applying for licenses. What do you think will happen?
I think there's a few ways to look at it. Them coming in the region will definitely add competition, but that's a good thing because it will force the local players to up their game. You know, Jamie was saying how Revolut is, you know, so swift, so easy, like user friendly, etc. I'm not using personally one from the region, but that's going to give them pressure to provide better features, better products, faster products, maybe things that actually Revolut doesn't offer today that can be specific to the region. It's going to raise the standards, right, of the digital banking in the region. So I think that's a good thing. Another way to see it also is, as you mentioned, we thought that they would come in and buy the local players to get access to licenses quickly. Seems like that's not the route that they're going for. However, they can still do partnerships with the local players for specific stuff. If you think at like Tamara or like those apps that are already big players in the buy now pay later space, for example, it might be something that they want to do with them because they have those licenses, etc. So there are several ways of seeing it. I think it can be good for the competition. It can provide more partnerships, and hopefully will give some vitality to the local apps and make them even better. I still think that local players have a leg up in the sense that because they have those, try to get one of those licenses, you need to know someone who knows someone who knows someone. I'm not sure how much Revolut is there yet. I'm sure they're hiring people in the regions to know how to do that. They're probably gonna get it fast and everything, but you know, they already have that leg up. They already have those relationships. They know how to navigate the regulatory framework. So I'm still rooting for the local ones.
Look, honestly speaking, the banking industry in the region needs to be disrupted in major ways. So that's why a lot of fintech startups have been established and want to like defeat these old, ancient dinosaurs of banks, right? But they've been protected so far. I think there's been a lot of support to the existing banks in a lot of countries, in Saudi and the UAE as well, because any actual digital banking license in these markets is super expensive to get and very limited as well. So like you can't really say that the new digital banks are really digital banks as much as, they're another bank, but they don't have any branches. They're not really, like, a lot of them don't really aspire to the same model as Revolut or whatever, right? So there's still so many things that can be fixed in the finance ecosystem across the region that players need to be there in order to do it. I think Revolut coming is probably a good sign because Revolut has a little bit of weight and can sort of push around and make things happen. When they make things happen, it'll be easier for the smaller regional players to also do those things. The other thing that I've seen in the past is when a big global player enters the market and they start spending huge amounts of marketing, they benefit everyone, even the smaller players, because the smaller players can sort of piggyback on that marketing and market awareness. I was like, oh, I didn't even know this is a thing that we could do. Revolut marketed it to me. Let me see what other options are out there. And so it actually would probably help a lot of the other players. So I don't see it as a bad thing. Honestly, banking is broken in the region. It's so bad, both for individuals, but also for companies and startups. Like just a couple of weeks ago, we were talking to some of our startups, and they're like, "We can't open bank accounts." I was like, "Yeah, welcome to the club, even us, you know." So the whole industry is just ancient and has been protected for too long. And I think big players that are going to come in and sort of make things better and shake up the market is probably going to be good for consumers, for other players, for the whole ecosystem. So pretty excited
It's
about
really,
it.
yeah, I agree. I agree. It's really good for consumers, but is it good for VCs? I saw one of the VCs commenting on this news on LinkedIn. He said, if this is true, many of those new fintechs will be killed by
Yeah, they
Revolut.
should be killed if they can compete. Like,
Yeah, if they can compete, yeah.
if you're crap, then you should probably die, right? Like I think that's the mantra. And I think if you're good, you're gonna figure out ways to benefit from this. Like you're gonna see it. Like it's definitely very clear. There's gonna be startup founders that be like, oh, we couldn't compete because Revolut came into the market. And there's gonna be others that be like, yeah, Revolut coming into the market, we were able to take advantage of the marketing spend, we were able to do this, XYZ, and look, we're in a better position than we were there. Most startups, you know, die of self-inflicted wounds, basically. Competition's never a reason that I've seen why a startup has actually failed. It's never like a reason.
And also, like, the first question that we ask a company when we invest in them is what's your moat? What's the defensibility of your app? So if you invested in an app that has no edge, that is just that doesn't offer something more than another one, then yes, it is going to die. And unfortunately, you bet on the wrong horse. So you cannot blame Revolut coming in if it wasn't Revolut, it would have been a local player that would have done it anyway. So
Yeah,
it doesn't really
become so
matter.
big
And
and
if
kill all the other
exactly,
smaller competitors. Yeah. So
just
Jessica,
build a
you're
moat.
based in New York. Yeah, you're based in New York
Yes,
and you invest in global and MENA-based companies, right? You invest in emerging
correct.
markets in general. So would
Yes.
this change anything in your strategy? Like maybe focus more on international players who might expand to MENA, or would you still focus on investing in MENA companies?
So the way we invest is we want to focus on the EMEA region and build bridges between the regions. We also invest in the US and the LATAM, but at a smaller scale. When we look at a company, we want to make sure that it can expand in a way or another. So if it starts in the Middle East, is it something that can be exported? If it starts somewhere else, is it something that can be imported? We don't only invest in fintech, we will also invest in health and climate tech. So these are themes that can cross borders. And we need to understand, does it make sense? Do they offer a product that we can potentially import to the region? When we look at the companies in the region, one thing that we look at is how do they compete with existing companies already, like in Saudi, in Dubai, etc., and can they cross those borders and go to those markets? As much as when we spoke about Paymob and Egypt, we said that it's important for the company to focus on Egypt. It did make sense for them to go to Saudi. I think that today it makes sense. Look at the example of Revolut. They're not just stopping at the West in general. They're coming here. There's a reason. It's that there's money. There's a lot of young people that are tech savvy, that want to use those apps, that are facing those dinosaurs, like Hasan was mentioning.
Yeah.
So we have to look at this cross border. It might not mean that when we invest in a company, it has to tell us, okay, we're going to expand next month. It's at first you start on your local business, you focus on your local business, you really, nail the product market fit, and then you start looking somewhere else.
Hassan, I know you're a big supporter of regional startups. You've invested in hundreds of early stage companies in here. Would this news maybe let you consider investing in global companies, or you're still focusing on MENA?
Yeah, if news like this would change my entire thesis, what the hell have I been doing for the past 14 years, right? Like, no, it's not. No, it's Honestly, I really believe in the region quite a lot. We have great founders. It's one of the last sort of markets to emerge. There's so much opportunity here. Like if you go to Silicon Valley, you're looking at deals that are, trying to find opportunities in niches of niches of niches, right? Like you got to go super deep to find something that no one's really done before. But here in the region, like there's so many things that no one's done before that it's just like, it's rather than digging a deep hole to find some gold, it's like gold just lying around everywhere in front of you, right? So yeah, no, this is not going to change my thesis. Like MENA is what I believe in. Founders in the region are amazing, and I want to continue doing this for as long as I possibly can. Yeah.
Amazing.
You have to have of everything around here.
Yeah, of course.
Some are investing globally, some are not, which is great.
Yeah, everyone has different things, and my mindset is,
Yeah.
I'm good. I don't have a competitive edge anywhere else. MENA is what I know. I'll keep doing MENA for a long time.
Fair.
Okay, so my last question about fintech, and then we'll move to automotive. So Revolut's recent 500 million secondary sale included shares sold by the founder. Employees and founders cash out some of their shares before there's a public exit. Do we have active secondaries in the MENA region? Do VCs let founders sell some of their shares early on before there's an acquisition or an IPO?
Yeah, we're definitely seeing that. So, we're seed stage investors. So by the time a deal gets to Series B or C, there's usually a pretty active secondaries market from the investors that are trying to come in at that stage. So we sold secondaries in our previous companies and like Callow and Flowered and others where we've cashed out. It's pretty good. And
That's for
so
you, Hasan. What about the founders?
yeah, the founders also have an opportunity to exit. So it depends. We've seen quite a lot of founders have secondary opportunities at Series B, but usually they're limited, right? It's maybe $1 million off the table or $500,000 off the table or something like that. Because they haven't reached the level of like the company isn't even worth $200 million. So where there's going to be a $200 million secondary, right? Like once we see companies get closer to $500 million, the secondaries that the founders are selling are a couple of $1 million. So that we're seeing, and it's usually led by the new investors coming into the round. So they don't take too much because they want to make sure that the incentive is there for the founders to continue to build the startup over the next couple of years. So no, it definitely is a trend. We do see quite a lot of secondary activity for founders and seed stage VCs like us in our region. It's actually part of our thesis. This is how we want to exit quite a, Series A and B guys can wait till the IPO. I can exit to them. I'll make money. It's all good.
Jessica?
Yeah, it's a bit similar for us. We sit in between where we do early stage, but we go up to Series A, potentially Series B in rare cases. But secondaries is something that we have to look at because we can't wait for IPOs to have returns or for an exit to have returns. It makes sense also for some of us to leave room to other investors that can have more impact on the growth of the company. We are focused on on the start of the company. Once they grow too much, there's only so much value we can bring. So let's us cash out and leave room for some more people. In terms of founders now doing secondaries and selling some of their shares, I mean, why not? As long as there's no conflict of interest, as long as as we still understand the will and the implication of the founder in the company, I'm not too worried. I mean, we usually built a strong relationship with the founders that we invested in, and for most of them, at least, we trust them enough to understand that they have enough of an incentive. Some of them already started with a huge ownership, so it's okay if they, let go a little bit of it because they want to cash out a little.
Mubadala is an LP and many local VC funds, MENA VC funds. And now they've invested in a competitor to many of their funds portfolio companies, right? An international player coming in and competing head to head, not even acquiring any of those companies. Is it for them to diversify, reduce their risks? What exactly do you think Mubadala is doing? Why they've invested directly in such a big company?
Mubadala's objective is to make money for the UAE. So wherever they think they will make money, they'll deploy it. I think, you can't fault them for that. Revolut is a pretty good company, so why not invest if there's an opportunity to invest in that one? There's different buckets, right? They have so much money that there's a lot of different buckets and a lot of different teams that are operating, and they're not always they all have their mandates, they all have their incentives. I think Mubadala has actually been a really good player for the local ecosystem. Without them, I don't think we would have any other LP base that would be investing in funds in the region. I think there's only really 2 or 3 in the UAE that are institutionals that have mandates to invest in VC funds. And I think Mubadala has done a pretty good job in doing that. So I don't think anyone's going to be upset. I think everyone's really happy that they've been active in the region, because historically most of the sovereign funds in the region have ignored the region, especially for VC, because VC is so small, it doesn't really move the needle for them. So any institution that's active in the region is really very helpful for the whole ecosystem. So yeah, I don't think anyone's gonna be upset about that at all. Like, and I think everyone understands. Yeah, obviously, it's a good opportunity. Their mandate is not only to invest in the region; they should be investing wherever they feel like it. Like,
this money went away and was invested abroad for so long, and if the majority of it was invested in the region, maybe the VC world would have grown faster than it is now. And so I don't think it's a bad thing. Yes, they do invest in VCs that might have companies that compete directly with Revolut. But when they invest in a VC, they don't invest in like all the they don't even know what the companies will be potentially. Some of them might just be, you know, an investment thesis. So they don't even know exactly what might be in the future portfolio. And the VCs are diversified enough where they should have an ace up their sleeve if something like that happened. So it's not, I don't think it's an issue at all. I don't think it's a conflict of interest. And if anything, it goes back to the competition question. It will increase competition. It will increase the standards. It will raise the standards, the local standards. So it can only be good for the region. Unfortunately, some will suffer, but the VCs are diversified enough where they should be able to survive.
Okay, my last question about this is about Revolut versus Paymob. Both companies started in the same year, right? And both of them are in fintech, and I'm sure both of them faced many challenges. Revolut is in Europe, and Europe is heavily regulated, and it's not very homogeneous. How come Revolut became a $45 billion company and Paymob is still in Series B, and now they're raising their extension for Series B after 2 years of amazing growth? Why would this happen? Yeah.
How much money was Revolut able to raise in total? Do you have that number?
I don't. Jamie, do we have that number?
Let me track it down for you.
Yeah, I think that's
it's usually
probably the main
capital, right?
reason.
So it's all about capital?
No, obviously, right? If you've got $100 million, you're gonna grow much bigger than if you had $10 million, right? It's very easy to track it. I think that's the issue that we've had across the region. There isn't really a lot of capital availability for startups. Every round they need to like scrounge. There aren't a lot of VC funds, even though everyone thinks there's a lot of money. There's not. You know, total funding last year was like $1 billion, $2 billion, which is nothing. Like that's the total funding that went to Holland or something. How much is it, Jamie? You figured it out?
For context, I don't have the total funding, but there's Series E, which is back in 2021, which is $800 million from SoftBank and Tiger Global. So
yeah, so
but that's to invest in the MENA region, right? Why don't we attract this amount of money?
There is no money. Like it all flows downwards, right? Like there aren't enough LPs that are focused on VC funds in the region, so there's not a lot of money with the VC funds in the region. Like what's the biggest VC fund in the region is maybe STV, but you know, their second fund is not really launched yet. So, you know, other than them, the biggest fund that's been raised is maybe $150-200 million. Like if that's the size of the funds in the region, how can any startup raise $800 million for a single round? It's not possible. And so we don't have LPs that are giving enough money to the GPs to manage. And so the GPs don't have huge amounts of resources to give to the startups. Like now we're seeing it, the pre-IPO rounds, the big rounds that we're talking about in the region are how big? Like how big was Tabby's round, which was the biggest round that we've had for a while. It wasn't really that big when you look at the rest of the world. Oh yeah, that's a small Series D, whatever, like no big deal. It wouldn't even come into like the top maybe 50 deals that happened in that same year or something globally.
And you can add on top of that obviously Egypt had economical turmoil, had geopolitical turmoil. You had a lot of devaluation. As much as a company can hedge, you still are losing money on your FX. So, I mean, even if they start at the same time, when you are in a stable environment, you're going to grow faster.
Yeah, but
You're
even
going
if,
to have capital.
I don't know if
And
I agree
people
with that.
are scared. I feel like I feel like VCs are more worried to invest in a country. Like, it's easier to invest in Europe. Than it feels more stable. It feels like your money is more secure than investing in Egypt, where
But if Paymob
it's
had
unstable.
Yeah, but if Paymob had $800 million, I'm pretty sure they would not just be an Egyptian company
Exactly.
over
Yeah,
the region,
of course.
right?
Absolutely. Yeah.
So it's money. That's what it is, and it all
It's so
flows
money.
down.
Yeah.
Yeah, we're just not seeing that sort of capital come into the region from LPs and GPs and all. It's all down. Like every Tabby's round and Tamar's round and all these things were banks that were setting up SPVs to invest in these sort of banks, and so we don't have that capital that's being deployed into our startups in a region that allows them to really scale fast and grow to these levels. It just doesn't exist. So I think until that's solved, we're not gonna see a lot of unicorns in the region. We'll see a few. We're not gonna see any decacorns in the region. Like that's like not even. It's gonna be that's 5 years out maybe. Like there might be something that comes in, but like getting to $1 billion valuation in the region means you need to be raising $100 to $200 million round. Who's investing $100 to $200 million into a startup in the region? Like, tell me. Like, no
I
one,
think we
right?
are going to see a
No one
change,
will.
though.
Yeah.
I think we are going to see a change, notably with those sovereign funds starting to reinvest in the region. Like PIF was heavily investing abroad, and now is looking more at the region. And actually, a lot of external and foreigner investors are now looking at the region as well. VCs are trying to raise money from local players, from LPs in the region. They realize that all this money that used to be funneled to us in the US, in Europe, etc., is now starting to dry out because they want to invest in the region. So now we need to come to the region. To give you just an example, there is a big LATAM VC event in New York in the second week of October this year called FLapKap. It's a conference on VC PE with big LATAM players. They contacted me because they want to know how to raise money in the MENA region. So we've gotten to a point where I think it's flipping, and finally this money is coming back to us, and hopefully we will be able to invest, in the ecosystem. But then again, we see that Revolut is getting some of this money, so it's gonna take some time. It's gonna take some time.
I love the optimism, but I don't think that's gonna happen. I really like. I've been seeing it,
I'm
right?
Lebanese. I have to be optimistic.
I
Else,
mean, we're VCs. We have to be optimistic, right? But I don't like it's just so look, like we've been everyone's coming here for money and they're all like paying lip service to, yeah, we'll invest in the market. And
we'll
we've been
invest.
seeing what that means. And it's like, yeah, give me like $10 billion and then I'll put like $50 million check into one of your startups. And like, oh wow, they're investing in our region, but it's like nothing of what they've been given. And so
True.
I was super optimistic in 21 when all of the funds were like naturally looking at the region because it made sense as an investment perspective. But then after the crash where all the VCs were like, we don't have any money, let's just like refocus on our own local ecosystems, everyone just pulled out of the region. And I think that's what's going to happen. Like they'll look at us for a little while because they're getting a little bit of money from the sovereign funds. They'll do a few token deals here and there, maybe 50 million, 100 million, which is great for us as an ecosystem, but for them it doesn't really make a difference. Like, yeah, we can afford to lose that in our fund structure. And then once that money dries up and they're looking for the next fund and the funding is great again in the US, they probably won't even look at the region again unless they've made a lot of money, which they won't because it's still an early ecosystem for everyone involved. So yeah, I don't know. I'm a bit jaded that money is really gonna come. I hope it does because it's annoying. Like I have great companies that need funding at Series B and C, and it just isn't a lot of players. But yeah, I think that the whole ecosystem is just, there's a plateau, and beyond that, you really need to figure out other sources of capital to be able to grow. And I think that in itself is an obstacle to get companies to raise an $800 million round. Like 800 million is most of what was raised by all the startups in the region, right? Like, who's going to be able to use that money?
I feel like it also comes from within, right? For so long, there was maybe a lack of credibility for the startup in the region, and even we as MENA VCs would look abroad because it just felt more developed, or more, or maybe it's just a, I don't know,
Not me.
complex that we
I
have.
believed.
Yeah, no, not
Not
you,
me.
but
I
like I'm
believed in the
talking.
region, no matter what was
Yeah,
happening.
for sure. But like, that I think there's something also from within that we need to change. We start looking at the startups differently now for some of us, where it's, oh, we actually have the talent, we have the science, the education, the tech savviness, all of that. So yes, it feels. The thing is, even for LPs, right? If you tell some LPs we're only investing in the region, some get a little worried. But the economy, but the instability, but the quality of the startups, etc. So there's not only a change in the VCs, there's also a change, like up the change in the LPs, where they start they need to start seeing that there is a lot of potential in the region, and this potential can only be converted into something if there's an influx of capital.
Jamie, rescue us from fintech. Please move us away from fintech.
Yeah,
What else
we'll
do you
move
have?
away. We'll all cool down by let's talk auto, of all things. So yeah, let's chat about Seez. So UAE based auto kind of SaaS startup. They secured $4.2 million in funding from it seems like it's Pinewood Technologies Group. I think they're US based. So Seez started in 2015 by Tarek and Andrew DeBrit. Provides AI-powered software solutions for car dealerships. I think it originally started kind of as a marketplace, I think, but they've sort of pivoted to this being the focal point of their offering. Their flagship product is a kind of Caesar, I think they call it, which is kind of clever. It's an AI chatbot designed to transform whatever customer interactions, blah blah blah. So in terms of their presence globally, they operate in 16 markets. So UK, Australia, South Africa, GCC as well. So this investment really is going to be leveraged for the US. So Pinewood, I believe they're going to get exclusive distribution rights as part of this particular partnership or this investment. That's that.
Platforms like Chef, VRoom, Carvana, and some others tried to disrupt the auto sale industry, especially for used cars online. And they created those online marketplaces. But we've seen them struggle with profitability. It's like growth over profitability for a long time for them. And I think Shift and VRoom, they both shut down their operations, but Carvana is still there. Now, Seez is focusing. Jamie, you mentioned they maybe started with a marketplace, but then they pivoted, which is a smart move because now it seems that they're enabler, e-commerce enabler for car dealerships. So they're helping dealerships to bring their inventory online rather than pushing a marketplace idea. Do you think this approach or this model would avoid the mistakes that Shift and VRoom made in the market?
I don't invest in automotive at all, so I don't even drive. So I'm telling you, cars is very distant from me. I'm thankful I live in New York, where I can take my favorite train every day. No, I mean, I know that Seez has a lot of experience in emerging markets in that area. It might be very different from the US compared to VRoom or even Carvana and all that, where they're struggling. Is their model good? I mean, I don't know much about the model.
Hasan, have you dabbled
I have a
with these
car.
models?
I have
Okay.
a car. I actually like cars a lot.
There you go. Already even more of an expert than me.
I like cars a lot. But look, I think it's just one of those things. Like C started off with a different model, they pivoted to something else, and it looks like this might be a second pivot as well. Because they threw the word AI in there, which is always like, oh, that
Red
wasn't
flag.
what you started with. So like,
Red flag.
Yeah, it's not a red flag. It's just one of those marketing things that startups pull off from time to time. Nothing against that. Like, good, they raised money.
Mm.
Why not? I think it's a good team. It sees. It would be interesting to see how that US expansion actually works out. I think there are other competitors and players in that market, and it's not a natural like growth for us as MENA startups. I think what we see is we'd probably expand in region, and then we'd probably expand after that into similar emerging markets with similar characteristics. But I don't know, they probably did the market study and saw that the US is probably an interesting one for them to sell to. I have no clue. But whenever AI is in a company that was around before AI was there, it's just something to think about.
Okay. So
And
let's
to be
end with
fair, the
general.
US is
Yeah.
so to be fair, the US is so diverse, it's so big, right? That
Yeah.
I think Seez can leverage that emerging market experience that they have to serve certain area that are more underserved, that are closer to an emerging market model than the rest of the US. So hopefully they can use that experience to do that, and that's how they would compete with local players. But
Yeah, I wanted
we
to
shall
end
see.
with this question. How can a MENA region, like in general, Seez or any other company, a MENA-based company that's expanding to the US, they have the funding, they have the will, they want to expand to the US. How can they start there? What should they prioritize? Any advice at all?
I think for me, like it would be focusing on some niche markets that look similar to what we get in the emerging markets. As I said, the US is so diverse that it's not, the whole country is not a first world country. Some of it is very underserved. And that can be something that's where I think some companies from the Middle East can have a leg up, where they have been exposed to a different market and they can use that edge to grow there. There is some things that you might not think of because you're in a developed country, or not that the other countries are not developed, but like in a powerhouse like the US, but that actually people see in their day to day, like San Francisco and New York. It's a completely different world. So I think this is where Middle Eastern company can have an edge.
Hasan, advice for MENA companies going to the US?
No, I think the really interesting model that I was reading about a while ago was Toast, right? So Toast went IPO, super profitable business, expanded very differently than the traditional Silicon Valley companies by going after markets where the Silicon Valley guys don't even think about, and just churned it out and did a really good job doing that. So I think for me, that's a really interesting case study of how you don't have to do the Silicon Valley model of go to Silicon Valley, raise lots of money, and then expand in the West Coast and East Coast or whatever. You can probably follow a path similar to Toast and like churn your way profitably through sort of the growth that you need to do. And so in other markets within the US. So I think I agree with Jessica. I think there are ways to expand into the US and work in that market where you're not going head to head with people that have raised 100 times more money than you. So that's
Exactly.
yeah. But I don't think it's a natural progression. I think usually you do that if someone came and gave you money in order to do the US expansion. But like there's other more logical expansion paths for a lot of startups in the region. But again, it depends on the industry.
Have you noticed the dog here? Did you see it or not? It's not here anymore. I don't know.
It is.
I just saw it pop his head, but that's it.
It's Taffy.
Gets to prince.
Hi, kitty.
Yeah.
So tiny.
Taffy.
It's
Yeah,
small.
she's 10 years old. She's not a puppy.
Oh,
She's
wow.
smaller
wow.
than a cat. Yeah. Well, with that,
So cute.
thank you so much, Jessica and Hasan, for joining us today. And as always, thank you, Jamie, for getting us
Thank
all
you.
this news.
Yeah, thanks so much, guys. Really appreciate
Thanks,
your time.
guys. Take
Thank
care.
you all.
Thanks.
Pleasure. Thanks, Hasan. Thanks, Jessica.